all ready to start. I think it'll be great, as Marcin was suggesting, if we start with a brief introduction of you guys and your background, your fund, and maybe a few investments.
Sure. Hi, I'm Marcin from Market One Capital, and we are a marketplace first focused fund. So we love marketplaces. We do it for more than 12 years. And we are based in Warsaw and Barcelona. So within Market One and our previous fund, and also being angel investor, I invested in more than 30 marketplaces. Out of them, like 90% were seed on the seed stage. And probably the most renowned are Dog Planner, Brainly, and also from the newest fund, PackHelp, and Eversports that are also present here. So we invest in marketplaces because of two reasons. One is typical, I would say, business-wise. So we believe marketplaces were the fundament of e-business. So there were one of three fundaments with software and e-commerce. And they will always be a fundament. And the other reason is emotional. So we love marketplaces. We love how they evolve and perform.
So maybe Dan, you can introduce yourself now.
Yeah. My name is Dan Hoffer. I'm managing director at Autotech Ventures, which is a Silicon Valley-based venture capital firm that invests exclusively in transportation companies, ground transportation companies in particular, anything to do with the ground transportation ecosystem. I have a history of marketplace investments, both as an angel and at my current firm. We have a lot of marketplaces and in previous roles as well. I was also the founder of a travel website marketplace company called Couchsurfing.
And what is it that drags you to marketplaces? Why do you invest in marketplaces?
Marketplaces are highly defensible when they're working well, and it's I find it very intellectually interesting to match the two sides together in order to maximize liquidity. And it's a lot of fun to build a successful marketplace. It's a unique challenge, but the rewards are uniquely high when it works.
Great, thank you. Mathias.
Yes, hey, I'm Mathias. Most of you know me from moderating this morning. I'm with Speedinvest, running our focus fund. Speedinvest X stands for network effects, and also love all things network effects and investing into network effects. Carmen is laughing because she's referring to my email.
Two things. His email is very funny and he has a heart on it because he loves marketplaces. And also because Samaipata is a Spanish fund originally, but I lead the UK. And in the UK, people, when they sign their emails, they put an X, which is like a kiss. So I always think about it.
So it fits very well, a heart and a kiss. Yeah.
Exactly. And actually, Mathias is the mastermind behind this whole event. So I think we should all be very grateful to him for this insane setup that he's organized today.
Yeah, it's everyone, the whole team actually. Yeah, and we started earlier this year in obviously in San Francisco also with Dan. So I think it's a group of people behind it. But yeah, great to have you all here.
So this love, I know that you also are driven by chocolate and espresso, which we share, but what is it that made you fall in love with marketplaces?
I think Dan already put it exactly the way how it is I've seen the power of some marketplaces and network effects unfold also earlier in my career, and in companies delivering really nice EBITDA margins after they have won a market and be the sole leader in a market and see how profitable that can be in the long run. Also having worked at Naspers before, Josh was referring to them, so I can understand why they overinvest or invest so much into it, because you can reap the benefits in the long run, and I think that's super exciting and makes it very attractive also from an investor's point of view.
Yeah, I agree. In our case, I think defensibility as the main driver of long-term value is the key, right? And network effects are such a strong driver of defensibility.
Yeah, absolutely.
Great. So when you look at seed stage marketplace, or very early stage marketplaces, what are the first things that you look at? Because at that stage, there's not a lot of data, there's not a lot of traction to prove. So what are the key indicators of success? that you actually look for?
I can go first. For me, I think it's a lot about the team. I think a lot of people say that probably, but it's true because as you rightfully said, I think at this point in the development of a company, there's not much more. And we talk a lot about network effects, but let's be honest, at seed or even pre-seed stage, it's very hard to spot them, very hard to see them in the data usually. So you need to look for other indicators or maybe the potential to develop network effects in the long run, and then talk to customers and find out if you believe that those network effects can be powerful enough and strong enough in the long run. So I think next to the team, probably talking to customers and figuring out whether the marketplace is actually solving a real problem is super important.
Yeah, I totally agree. Talk to customers. What about you, Dan?
I try to take a data-driven approach and look at transaction data. And even if there's not a lot of transaction data, there's still a lot of information to be gained from the data that exists. As Josh was saying in the previous session, sometimes in the early stages of a marketplace, you're doing things that don't scale. If you're doing recruiting, you're making the phone calls yourself and trying to fulfill the demand or fulfill the supply. I think that's okay, but there's still data in the nature of the demand and the supply and the nature of the transactions that are occurring. And that data gives you insight into who's on the demand side, who's on the supply side, why they're transacting, what the ticket size is of the transaction, and potentially where the willingness to pay might come from over the long term. So even in the early stages, so long as there's some liquidity at all, it's helpful to understand the dynamics of that liquidity.
Yeah. So definitely agree with you guys. So I would say founders, and in fact at least one founder, should be like super great. Yeah. So super smart, super analytical, with vision, and investing at seed, you cannot like the business more than the founders. So you cannot get really attracted with the business, with the idea. If you like it just 1% more than the founder, then it's a red alert for me. Then the other thing that I always look at seed stage is the first, let's say, signs of liquidity on any side, on one of the sides of the marketplace. So I want to see like the first really small traction, even in a small group, nice stickiness and activity. This is important. And what I also very much and always look at is like the growth hacking approach. So I don't believe that you can grow marketplace from the early beginning just with commodity marketing, so just performance and ads. You need to think a bit outside the box and look for growth hacks. And in fact, organic traffic and SEO is one of the growth hacks, yeah? But there are so many others.
Yeah, you've mentioned the team. Is there anything special that you look for at marketplace, specifically marketplace founders, that are not necessarily so important in other business models? Like, what does it take to scale a marketplace?
I think that Ben from NEA earlier today on this stage, he said something very smart in that way. Was it's not a marathon, it's an ultra marathon. So people need to be persistent, or they need to show a lot of tenacity, and I think that's exactly the kind of things you're looking for. You want people that can push through and can hold on, because it takes time until a marketplace or platform takes off. Especially when you come in at seed and you don't have that many data to show, you wanna make sure that at least the people are in it for the long run and they can push through. So I think that kind of behavior, persistence, I think is super important.
Marcin?
Yeah, just the thing that I wanted to add is that we also look at the values and also the reason why the founders do the business. So we very often ask them like about their personal goal, why they start the startup. Yeah. So very often we hear answers like, okay, I want to be rich, or I want to be famous, or I want to prove myself that I'm great. Yeah. So there's no, in fact, right answer for that. Yeah. But like being like fully focused on getting fast rich, it's also a red flag because someone can push for exit very fast. Yeah? If someone wants to be famous and prove himself that he's great, then maybe it would be hard for him to recruit great talents because he wants to be the best in the company. Yeah? So we try to know the seed founder pretty well and on the even friendly
I
face,
agree. Also, business with a soul are quite important, and we also do that. I take founders for piscos, like evenings, because it is absolutely important to see how they behave also in social context. And anything to add? So we have persistence and strong. Why lounge? Reason why?
I agree with all those psychological characteristics. I would also add more on the business side that it's important to find founders who can truly internalize an awareness of both the supply and the demand sides, because in many cases they are very different, and sometimes if it's a B2C marketplace, then you need someone who can think about customer acquisition on one side and business acquisition on the other side. And that's a different way of thinking and requires a little bit of a different skill set and awareness. So the founder needs to completely internalize and encompass both ways of thinking.
Great. So great points on what it takes to succeed. But if we look at the other side of the coin, what are the most common pitfalls or mistakes that you've seen happening why marketplaces fail at very early stage? Marcin, yeah.
I think intuitively I would say is creating a solution to a non-existent problem. So building a marketplace or for the sake of building a marketplace, but not really thinking about what are the actual challenges and issues in the industry and the problems that I want to solve. And then basically it's a non-problem, so to say, that you are building a product for. And I think that's what we see a lot, or it's simply not a big enough problem for people to change their paradigm, change their behavior, or adjust their daily habits. And I think that takes time to figure that out, especially also in more B2B setups. So definitely high on the list, I would say.
I fully agree. So like the marketplace cannot be a feature business. It has to solve something crucial, like disrupt a real problem. Yeah. So we tend to see marketplaces even with great teams, but the value they propose is like a bit more as a feature, not as a really consistent business. So the other two reasons why we see the marketplaces at seed phase fail is, of course, in 90% as a team, a founder, founding team, and the other is, of course, pretty obvious. So chicken egg problem. So not getting to the proper liquidity to raise another round.
Which usually I think relates to a lot of founders I see confuse their vision with their go-to-market. So they have you can have a very big vision, but and I think Andrin was speaking about it earlier this morning, you have to saturate nodes. Like otherwise, if you need liquidity, it's very tough. Like you cannot launch in all of Europe an on-demand marketplace. Like Deliveroo just launched in Chelsea, right, and proved it. So I think I agree. Not reaching liquidity is a very big one.
Every marketplace has an imbalance. It is easier to attract one side than the other. And if you're a founder, in many cases, it's very difficult to be a founder. And so there's a natural temptation to do what's easy and what makes you feel more comfortable in your success. And so there's a natural gravitation towards attracting the side that's easy. But and so where I think some marketplaces fall down is the founders are going after the easy side when really they should be starting with the hard side and making sure that the hard side is possible before they run out of the small amount of money that they've raised.
I see a lot of founders very focused on the demand side when a lot of the challenges are on the supply, on scaling and defensibility of the supply. So
sometimes the supply side is easier, and sometimes the demand side is easier. So it varies, but in each case, it's pretty clear early on which side is the harder one, and that's the more important side to focus on.
And I think we've heard a lot about Amazon and Facebook and all of them today, but in a world of giants, like, where do you guys see opportunities in marketplaces, and what are the spaces that you're currently looking at?
So for us, like, marketplaces is a never-ending story, in fact. So it's evolving, I would say, creature that every year and every quarter brings something new. So right now, we mostly focus on definitely B2B marketplaces. We love how the SMEs and their processes could be disrupted with that. We love also highly curated, managed marketplaces. So this is something that really can bring much more value and stickiness. And I'm a very strong believer of AI-enabled marketplaces. So we start very strongly focused on that. So how can you, like, with tons of data, of customer data that you collect with your business, how you can really bring the AI value to two sides of the marketplace?
And maybe Dan, do you want to?
My firm focus is exclusively on ground transportation, so that's the area that's of interest to me. Within that, we like things like, on the marketplace side, we do non-marketplace investments, but on the marketplace side, we have a portfolio company that focuses on RVs, and I'm interested in charter buses and so on. But you guys are probably, unless you're in ground transportation, probably not that interested in what I'm interested in. So I'll abstract it a little bit. What I'm interested in is, in the age of Amazon and Facebook and some of these big players, I'm always interested in defensibility and the nature of the defensibility, and why. And with any company, with any Amazon or a company of that scale, it's easy to enter a market, relatively speaking. But what could a startup have or develop that would make it harder for them to enter? Maybe it's exclusive contracts or exclusive supplier relationships, or a particular brand focus or niche somehow that would make it harder for a generalist platform to enter. So I'm always focused on the differentiation and especially the defensibility dynamics.
Yeah.
I think we probably wouldn't be investing into a lot of companies that we look at, or that we also ended up investing into, if we would always think that they could be, or Amazon could do it, or Google could do it. I think there's like killer arguments. So I think if they can do it and they want to do it, that is actually just a reason to do it in that space, because it means it's big enough for them to also make a difference and can be very attractive. And if you can deliver a better solution, if you can build a better product, very focused on a specific niche, I think then that can be super interesting, actually. So for me, the Amazon or Google argument doesn't really count in that sense. In terms of areas that we focus on, I think maybe just to add on what the guys already said is, in general, like kind of technology-enabled marketplaces. So I think in B2B, there's probably more categories that are still open, like greenfield, where nobody has built a marketplace yet. But if you look into B2C, we talked also about services this morning from Atomico. I think there is some marketplaces already, but they are delivering with a relatively poor product. So I think you can still deliver a better service, a better solution, and with the technologies that are available right now, probably deliver a 10 times or 100 times better solution than what is out there on the market, and maybe with that also disrupt the existing network effects there, and just have a better solution. Like there was Craigslist or eBay, and then we spoke about OfferUp and Letgo that were still coming out and just through mobile delivering a better experience, right? So similar dynamics with new technologies, just disrupting an existing market and delivering a better solution. I think that way of thinking.
Yeah, I think that's key. There's been a lot of talk this week about service marketplaces in the community, and that was actually the point. Is like traditionally, even though the service economy is so big, they have lagged behind versus product because of a lot of issues that technology can now help solving. Cool. So we have 5 minutes, and I thought we will do a quick fireside chat. So I'm gonna ask you guys, I give you the 2 options. Some of them, some you've mentioned, but let's spread a little bit, keep the answers short and sharp. What's your favorite network effect?
Trans-regional network effects, I would say. I just keep it short.
Great, thank you.
I would say standard two-sided marketplace network effect plus potential for another one, like hopefully social and community marketplace.
Anything with exclusivity on one side.
Okay, it's a very defensibility. Exactly.
A monopoly, right?
Cool. And B2C or B2B marketplaces? And why, shortly? Like.
Network effects. I don't...
No, because the question here is there's this conception that B2B marketplaces sometimes take longer to scale or are capped at their scale. So,
if I would have to choose, probably then B2C.
Okay. I convince him.
Yeah, it's like I love all of them, so it's yeah. So if I would have to choose, then B2C also.
B2C also, even though you said that you're focusing on B2B.
Yeah.
Great, I'm convincing him. Right.
I'll be
B2B.
contrarian and go for B2B.
Yeah, in transport. Yeah, exactly. And high touch or low touch marketplaces, and you've spoken about highly curated, but.
No touch? No. No, I think high touch, actually, based on what we just discussed.
Yeah.
Definitely high touch marketplaces.
Contrarian again, I'll go for low touch.
And we've
high touch is risky.
And we've touched upon it briefly, but product or service marketplaces. No, I'm not giving him the chance to be contrarian anymore. He has to set the trend.
I have to take a position on something.
Yeah.
I'll go for service.
I go definitely for service.
I'm not contrarian. I'm also going for service.
So consensus on that. That's where the opportunity lies.
We are building a B2C high-touch service marketplace right now. Is that the thing?
Yeah, and now
low-touch service marketplace.
Oh, sorry. Yeah.
And now, because we cannot have a panel and not talk about blockchain, even though we're ending 2018, is it blockchain like as in further disintermediate and therefore risk the marketplace model? Yes or not at all?
If short answer, no.
I'm not if I'm a great fan of managed and high touch marketplaces, I think blockchain is the opposite. Mm-hmm. So yeah.
I think blockchain represents an enabling technology, and there's a ton of benefit in it, but not in immediate applicability to marketplaces.
Brilliant. So we have our marketplace built. Exactly, without blockchain. And now, delighted to open the floor for questions.
Thank you very much. Just based on the topic, could you mention some metrics, some traction numbers? So what are the GMVs you're looking for? What are the month-on-month growth rates that you're looking for when you do your seed investment?
Did you see the napkins at lunch?
I think we've done pre-revenue, pre-financial traction investments, and we continue to look at those companies. I think what we mostly focus on is non-financial traction, so engagement numbers, like how do people use your product, and what would I expect from, based on the use case that the product is targeting, how do these numbers compare to that, basically. So it's very individually, so I have to say it depends, I'm sorry. But that is, I think, what we mostly look at. So I think what would be great is if there's already a product, maybe not monetizing, but already having some users, some usage on it, some engagement, and be able to show that is in line with the use case that you are targeting and the problem that you are solving, essentially.
Yeah, so I would love to see the first numbers of marketing, of smart marketing. Yeah, so any kind of marketing growth hack, even on a very small scale. So great indexation of content, or like being able to outsource your marketing on your vendors, which also happened to few companies I observed. So any, like on a really small scale, proof of smart marketing.
I'll combine actually the two things you've said, because this is one of the most common questions we get, and one of the ones where we fail to answer every time, because it really depends. But also because we look at it so early that ultimately what we're looking for is to understand the customer behavior, like how are your customers relating to your product or service, and that also has to do with how you're acquiring them and how you're retaining them, which would be the power of the brand. But sometimes we don't really, like GMV or MR, like we look at the trends, but ultimately we're looking at those metrics that actually tell us how are they behaving towards your product or service, I think.
This is one of those questions that founders love to ask and VCs hate to answer. I agree with everything that they said, and I also hate to answer it. However, as the contrarian, I will give you a specific answer. And I don't fully believe it, because everything that they said is correct. It's really about the story and the profile and the customer dynamics and the growth hacks and all that stuff. But if you want specific numbers, for me personally, for a seed stage investment, I'd be in the ballpark of maybe mid 6 figures GMV run rate to low 7 figures, maybe 2 or 3 million.
And he's an investor in the US, right?
Yes, I'm a Silicon Valley investor.
Yeah, so it depends, see, very much depends.
Yep, those are Silicon Valley numbers.
Hi, my name is Efim. I'm CEO of Bash Today, is the biggest marketplace for event spaces in Russia. And for now, we want to scale. And our biggest challenge when we talk to investors is to prove that we actually can scale. The numbers are really good. We are break-even, but different investors say different things, like you should launch abroad before you come to us or something else. But the numbers are really good, and I really wonder what would be the really specific requirements or demands from an investment fund for a marketplace like ours to meet those requirements.
Yeah, so my first guess would be to, I would definitely first look at the unit economics, if it's healthy on your home market, if you proved the stickiness, if the CAC to LTV is healthy, and then if you can replicate it to other markets, and probably doing the test first on marketing to somehow like have the feeling of possible CAC level. Yeah, that would be my first guess.
There's a lot of context around that.
Yeah.
Some of the questions are, what does the long-term profile of the business look like? Is this a Russia-focused business? Is this a global business? What stage are you at? Roughly, what ballpark are the numbers in right now? And to the extent that you can, ultimately investment stages and processes are about de-risking. So to the extent that you can prove success in Russia, that's one proof point. To the extent that you can prove success outside of Russia in a certain market, that's another proof point. The more proof points you have, the more investors feel comfortable, the easier it is for them to invest, and the better the terms are to you. A lot of context.
Maybe from this morning also the guys were talking about building a playbook. I mean, Uber was obviously already at a much later stage at the time, but maybe if you are in one very specific market, I don't know, a part of Moscow, for example, I understand it's like a very local model. if you found like a way to grow there and acquire customers and build a decent business on a very small local level in a niche to actually show that you can branch out and have found like some sort of recipe or replicable model that you can bring to other cities, other areas, and that actually works to a certain degree. I think that is probably something that you would want to show to prospective investors.
Yeah, 100% agree. I think a playbook on acquisition and retention and the profile of the business, that playbook not being very Russia specific, but being like transferable to other countries would definitely prove that it's scalable. Well, as long as that playbook shows healthy unit economics, 100%.
And by the way, great, you are coming all the way from Russia. There were also some people here I actually want to know, because there was someone from Australia here. That was actually awesome. Someone who took the whole flight from Australia and also from Israel. So I think that's awesome. So just wanted to say that.
Yeah, good job to you guys.
Willkommen.
Thank you.
I love that mic. It's really cool green box.
Hello. Hi, I'm Eline Leijten. I founded Plugify, a live music marketplace. And I'm curious to hear your views on latent demand. I have a background in strategy consulting, so I'm also a bit skeptical when it comes to putting latent demand in your market model. However, we see in our product that a significant part of our user base has never done this before, has never booked an artist for their events. So there appears to be tangible, measurable proof of latent demand. How do you view this, and what proof would you guys like to see if you actually buy the story of latent demand, so to say?
So I think that's a very interesting case study, because anytime you're evaluating market size, you have the opportunity to steal share from existing players or to create and or expand the market. And it's, as a strategy consultant, it's a lot easier to do market sizing when there's an existing market that you can poach from or cannibalize. But as we were talking about Uber earlier today, and obviously they expanded the market and in many ways created a new market. So I would just say that when pitching to investors, you need to tell a story around creating a market. And I would say that you can make this a strength, not a weakness of your pitch, and say, look, and you can highlight elements of what you're doing and say, look, 80% of our users have never done this before, and that's a good thing, not a bad thing. And use that to tell a broader story about how you're creating a market.
Yeah, definitely it's a tough case when you need to build the market, but I would say that showing a great stickiness and NPS just on on a small bunch of customers that already you persuaded for your model, it's already influences the imagination of investors. Yeah, so if you show like great NPS, then investors could believe, okay, there's lots of struggle, you need to build a market, but you can win it and own it, in fact. Yeah.
Maybe one point about it, no matter if it's latent demand or supply, is maybe also you're somehow creating a unique demand or supply, because if you convince those people that they should book something through you that they before didn't even know was available or was possible, then you have that type of demand or supply only available for you. So it also creates more defensibility in a way, right? Then the question is it big enough? Can it be big enough? And so on. But I think as a general concept is actually can be quite attractive. The supply from Uber is unique, and the demand in a way as well.
I would just add one more thing, which is many of the best companies in the world are the ones that create markets. And so while everybody else is doing trench warfare, fighting tooth and nail for a little bit of share, if you're creating a market, then almost by definition, it's sort of a blue ocean opportunity. And so if you tell the story the right way, investors should be able to appreciate that.
Yeah, so I think we have time for one or two more questions.
Hi, I'm Rico from VisiOne. We are offering digital pricing solutions for automotive retail, so maybe we should speak later on. My question would be, which deals do you most regret to have passed on? And looking back, what are the details you missed out on, or category of information that you should learn to look closer at in later deals?
It's a really good question. It's at the heart of FOMO and anti-portfolio. So.
I have two. One is Revolut at pre-seed, and they had 300 users, beta users, and I was just afraid that this is not enough to show any product market fit, basically. I should have had the guts and the balls to just do it. The other one is Get Your Guide, here from Berlin, which at the time I wanted to do, but I couldn't get the people behind it because they thought it was too expensive. So, which I think in hindsight from the seed investors, and I shouldn't say that because there's a lot of founders in the audience, and then we destroy our own market, is that I think at that point the valuation didn't matter if you look at it today. Like paying 10-20% more didn't make a difference. And I wanted to do it, but it wasn't. I couldn't get everyone behind it. I found it was too expensive, basically.
Yeah, there were definitely few, maybe not few, but many mistakes. Those that I regret was that I loved the founders. I had a feeling they are superb, but I was not convinced and didn't understand the business as good as they did. So I made such a mistake a few times. And I also did the opposite. So I loved the business, but was not convinced to the founders. And so I would say this is two mistakes that should be done in the opposite way. Yeah?
I was lucky enough to have the fact that the one that is my biggest anti-portfolio is now in the portfolio of the fund I moved to, so I can count it. But basically, it's a real estate marketplace for mid-term and long-term rentals. And I went out for dinner with the founder and a lot of other investors, and the guy didn't eat all dinner because he was just pitching. Like, I've never seen anything like that. It made us all VCs look really bad because we ate all the food and then but I came back to the office, I was like, we need to back him. But then looking at them, and it comes back to the demand and supply. If you looked at the model from the demand side, the growth and the trends were great, the top line was amazing, but the unit economics were not great, and we were not sure they would be very scalable. Now, if you actually flipped the model and understood that the clients were actually the supply and that the demand, the people who rent the apartments are actually just kind of a customer acquisition cost for the supply, then suddenly the whole picture totally changed, right? So we made that mistake of being very focused because of it being apparently a consumer marketplace, just looking at the demand metrics and kind of disregarding the supply just as long as it was there. And yeah, and then I was lucky enough to move to a fund that has it in its portfolio. So.
In many cases, you don't know about this stuff for many years, so it's quite possible that some of the deals I passed on in the last month I'll regret hugely in a decade. But some of my existing anti-portfolio companies are in business school. One of my friends with whom I was a drinking buddy, and we went to Burning Man together and stuff like that, he started a company called Tube Mogul. And I probably could have had the opportunity to invest back then, but I was a poor student and he was a buddy, and so nothing ever happened. And then I think that got sold for about $500 million to Adobe. So that's one. And then the other one, I was a co-founder of a travel website called Couchsurfing, and I was approached by the founders of Airbnb when they were at Y Combinator in 2008. And they wanted my advice, and we had dinner together in San Francisco, and they wanted some mentorship, and I probably could have negotiated an advisory role or at least an investment opportunity, but out of loyalty to Couchsurfing, which at the time was a nonprofit, So arguably I should not have been loyal from a financial sense because it didn't really matter anyway. But out of loyalty to Couchsurfing, I did not get financially involved in Airbnb at the seed stage.
So yeah, it's an very interesting question, because at the end of the day, like, our job is unfortunately a lot about saying no, and then at the same time you don't have feedback on how good you are on saying yes or no for like 5 to 7, even up to 10 years, right? So then you tend to remember these kind of things more even than the successes, but it takes time, and that's why I think we're a bit like we're scared by FOMO a little bit. So it's a question that goes to the heart of every VC.
And as a VC, you only get fired for the investments that you make.
True. True.
But also, if you do Airbnb, nobody asks you for the 9 others that didn't work out, you know. So.
I was listening to a podcast the other day, and it said it's the only, well, maybe not the only, but it's one of the few places where you can only lose your money once, but make it 100 of times, right? So yeah, that's the dynamics. Well, thank you very much. I think we need to move on to the next speaker. But thank you very much, you guys, and thank you everybody for listening so patiently.